You're listening to financialradio.co.uk. My name's Giles. Well, I'm chatting to Bill Rook from Redmayne Bentley. Bill, let's have a look at the FTSE 250 because I know that's a chart that you've sent over.
Yeah.
It's looked dreadful for a long time, but it
does a bit, doesn't it?
Has it been sort of building a bottom, or what do you think?
Well, it could be, couldn't it? I mean, that's what I've done here is looked at this sort of with a sort of price action cap on here, working out where we're going with this. The volatility has dropped off. Lower second indicator from the bottom suggests that the bottom indicator red suggests we're still in the bearish zone. I put a triangle on the chart suggesting this is where I think it's going to go.
Right.
I reckon 6895. If we get up to that level, where we were, I suppose, at the start of the year, we're about. It's not a million miles away from it, but it's about 600 points away from it now.
Right.
So it's not 10% really. So there's 10% odd that we're looking for from here. And given what last week's performance was like across on that, the world market, I think it could be a sort of a case here. The main bit of news we're getting through at the moment is that the house prices may have stabilised. That's supportive. And Bernanke is sort of calling an end to recession this year. Now that has a very important impact on markets. But just looking at this chart here, just going back to this chart here, the slope is now just ticking up. It doesn't look too stretched. It's moving up from a low position. The relative strength, the relative strength in the form of inverse Fisher transform is switching to a positive phase. Last time it did this, it moved up in February, although it didn't last.
Yep.
There's a case saying that this is okay for a bounce. Volatility has dropped off dramatically. The top indicator suggests that's the case. It could do. I mean, this is buying from a low, below the deck, if you like, but it could be okay. It could be okay. Yeah.
Okay, so it's come off life support.
Yeah, it's come off life support, and we're going across the 50-day moving average, which is the big green line on the chart there, heading towards the triangle, which is just below the 200-day moving average. We're playing in a bearish phase. Until those lines cross, it's always going to be a pig and a poke as to has it changed, hasn't it? Hasn't it? And this is one of the things going through the day is thinking, has it, hasn't it? I mean, it's very tricky.
Okay.
But the point is, I'm suggesting better now than before.
Okay. Kalahari Minerals is the next one you want to look at. Now,
I've got two. Yeah, I'm sorry.
You've done a candlestick chart here. Why have you done that? You don't normally do that.
This is just to give you a flavour of the volatility involved there. This share we looked at this one early February, and 35% gain in about a few days on this one, this is a good news flow. We're talking off there about what changes companies, what changes prospects for companies. The news in this company has always been around that it's been prospecting for uranium, and we knew that. And there are three tails here really. One of my colleagues was looking at this one 6 months ago and thought, well, this is quite good. I looked at it with a story, and one of my other colleagues didn't have a story at all. We all came up with the same answer, that we like the share prices around 50 odd. It went to about 78, 80 in a matter of about 4 or 5 days. The candlesticks give us a sort of broad movement of the share price, open, high, low, close, in a sort of a very graphic way. The interesting candle at the top after the rises was a doji spinning top that sort of shows the indecision. When you have what we call long legs, when you have these lines coming out of a very small body on a candle, it says that if it's had a good run, it's probably exhausted. It doesn't know which way it's going.
Right.
And you'd have to just sidestep it and just jump out. If that's the trader's attitude. What's happening now is interesting because it's building up, I reckon, to another break. I reckon it's going to go again. This is an interesting company because of the shareholders in there. Rio has increased its stake to 15%. Niger Uranium has increased its stake in there as well to about 11%. So there's some stake building going on in the company. That's why the volume rose dramatically. That volume hasn't disappeared. It's stuck there. The stories are still good coming from the company. I think this is a runner, and it's my view that this is an interesting play. All the other indicators around it suggest this is going upwards.
All right. Now we've got another KAH chart. Tell me about this one.
Why have two charts? Because another set of indicators, Charles. This is the thing. When you're sort of looking at different charts, you have different indicators. And what I've done here is I've used an MACD crossover, a rate of change MACD. What this does, and this is the crinkly line at the top, this tells you when the share's risen too fast. and it really is quite useful, not on a standalone indicator. When you've got a story running and everything like that, it's not I would say, the wheels on the car that we're looking at this, it's the aircon. When you get to a situation when you're cruising quite nicely, you want the aircon on. When it comes on in this indicator, as it comes on in this chart, it tells you that it's too high. When the box is coming in, this has risen too far too soon and it's slipping. Take your profits, it says there. Now, when you take your profits, you're getting out at between 70 and 80 odd pence when that indicator comes in, and then it falls back to 65. It's not the end of the world then. A lot of people will then be panicking out, and they'll sort of they'll like to share a game, and they'll probably think, well, I bank the profits at this level. I might have gone in higher, too high, so I won't actually make any money here. That's the other scenario, and they could actually leave the stock altogether. But what I'm saying now is this has gone too far. The indicator says, well, it goes too far up and it goes too far down. And if the story is still the same, as I maintain it is, and it's not getting better, as prospecting and other drilling news comes through here, then I think this is probably a better story developing here, and I think this is going to be supported by stronger price action, and this is mirrored by the rate of change MACD crossed back to the positive side, and suggesting that it's gone too far the other way. So we're using investor psychology to tell us when it's gone too far one way and it's starting to pick up from the lows after it's had a very good run. The premise of this indicator, I reckon, as I use it, is if you had a very good run on a stock and it just shows you that it's gone too far. So you get out where the box is, where the arrow is there, and you look to get it back in again if you believe the story is still the same.
Okay, Bill, thank you very much for that.
Yeah, does that make sense?
Yeah, it makes a lot of sense. Now, Bill, the next chart that you've sent, which is the FTSE.
Well, what I've done here is this is a variation on the candlestick. This is a consolidated candle chart, and it suggests the market is a buy now. But why buy now? Because it gave us a sell signal in mid-February, early February, and this has worked extraordinarily well. There's a good 200 or 300 points to be made out of this. Maximum, you could have made about 10%, I think, from the drops in that period, and it's turned positive now, reinforcing a short-term trading perspective. The market is going above a 20-day moving average, and also what I like about the market is the volatility has dropped off. Although VIX is a bit higher than we'd like it to be, it's falling, and I think this, coupled with the action in the world market, suggests that we're going to see an upside. I put a box on the chart, Giles, that you'll see. I reckon in the 40-100 level, this is where we could see our first level of resistance. But of course, in order for us to get out of the hole of this mile, we need a 46.50 level to show us which is the high in November, recent high at the start of the year. We need that to be cleared in order for us to be on a straighter path. So it's a case of how speculative you want to be, and this is a speculative signal system. It's worked quite well on short-term basis, as you can see from the chart. And I think it's good a trading tool to add to the box, really.
Bill, thank you very much. Always interesting to talk to you, and we will chat again next week.
Super. Look forward to that, Tess.